Awesome. It looks like we have a lot of experienced investors on here today. Does anybody have a condo already? Because that's what we're going to be talking about today. All right. 30 seconds and we will get started. All right, guys, we're going to go ahead and get started. Today's topic is, are condos a profitable niche? My name is Andrew Lasky. I'm with Savvy STR Agents, and I cover the South Florida market with my partner Lawrence. And what is South Florida? It's Miami-Dade County, Broward County, and then also West Palm Beach County. And we have a lot of different investments. So I've been investing in real estate over the last 6 years. I've also helped a lot of other investors get into properties as well. I have a lot of long-term rentals, short-term rentals in different markets, even dabbled into commercial real estate. I have houses, triplexes, duplexes, and I also have condos. So that's what we're going to be discussing today. And before we begin, so condos, it's all about how do we understand what the risks are, because there's other risks that you don't have in single family residences that you do have in condos. So it's about, understanding what those are and then mitigating. So the first thing is the HOA. So HOA fees, they do impact cash flow. You're looking at, especially in my market in South Florida, you're looking at anywhere from $500 to $1,200 a month in HOA at good quality properties. And, that takes up about 6,000 to 15,000 a year in potential cash flow that's now going to the HOA. And that's before you have any, mortgage, taxes, maintenance that's not from the outside of the building, just inside of your condo that you're still responsible for. Then you also have possible special assessments that can add so many more costs to the property that could make it, not profitable. So what we want to do is we want to make sure that we're getting the financials, we're making sure that the condo association has the necessary reserves required, and they don't have any upcoming special assessments. So it's very important that when you're looking at condos, you get in contact with your realtor and your realtor provides you with that information. And when it comes to purchasing a condo, you want to make sure that you're in a condominium with a lot of units. The fewer the units, the bigger the costs are going to be. So, for instance, if you need to fix a roof that costs $40,000 and you have 10 units, that cost is going to be a lot more per unit owner than the same 40,000 spread out amongst 100 condo owners. So it's very important that you take a look at that as well. Number two, you don't control the rules. So when you have a single family house, you get to decide on your property what you can and can't do. You can add things. When it comes to condos, you're limited to what the HOA says that you can and can't do. So a lot of these condominiums, the HOA bans short-term rentals. I would say about 90 to 95% in the South Florida market do not allow it. Obviously, every market is different. So again, you need to get from the HOA, the agreement, you need to comb through and you need to actually see, if they allow it. There's also, a lot of pet, guest, and renovation restrictions as well. And you are limited to the possibility of adding amenities. Really, when it comes to acquiring short-term rentals, amenities plays a very big role in the type of revenue that you can generate. And the more limited you are, the less likely you are to stand out from your competition. And then number three is liquidity. It's a little bit of a higher interest rate when it comes to purchasing condos versus purchasing single family homes. And due to the fact that there are a lot of condos, a lot more than single family homes, they're a lot harder to sell. You have more of a limited buyer pool and you have unpredictable appreciation in certain markets. Comparing the two. So condos versus single family homes. Obviously, when it comes to HOA fees, we just discussed that. There are some properties in my market and other markets for single family homes where you might be in an HOA most of the time that you're not, but you still have to check. But when it comes to condominiums, you're always going to have an HOA. When it comes to short-term rental restrictions, it's very, very common. Like I mentioned before, 90 to 95% of the buildings do not allow it. The last thing that you want to do is purchase a short-term rental in a building that doesn't allow it. And when it comes to single family homes, the restrictions are a lot lower. So you just need to check with the county and the city, and if they allow it, then you should be good to go. Financing rates, they're typically about a quarter to a half a point higher than single family homes. And when it comes to appreciation, just simply due to supply and demand, you're going to get more stability in a single family home versus a condo. And when it comes to the rules and everything, the HOA decides that in a condo, and when it comes to single family homes, you get to decide. The last thing that's important is cash flow. So when it comes to cash flow, due to the creativity of what you can do in a single family home, adding stuff into the backyard like a pool, a hot tub, mini golf, Connect Four, and like all these little games that you can add outside, building the value of the average daily rate versus condos where, again, you're limited and you can only really change what's inside those four walls, and it limits, again, your creativity, which then again limits your profit. A lot of the condos, whether you're purchasing a condo that's 550,000 or you get one for 400,000, due to, again, the lack of creativity that you're able to do, those condos typically rent out for the same amount. So it's all about like finding a building that A, allows it, and then B, you're getting the best value. Typically, the lowest ones in those complexes are the ones that make the most sense. So we've talked about, some of the negatives about condos, but there's also a lot of positives as well. So if you're a buyer, especially right now, the inventory is extremely high for condos. So you have the ability to pick and choose. You're not in a rush. You can make very, very aggressive offers right now, especially in my market down here in South Florida. It is absolutely a buyer's market. When it comes to single family homes, it is more of a tighter supply right now in the first half of 2025. When it comes to maintenance, condos are amazing. You have a lot less to worry about versus a single family home where you have to deal with like landscaping and other issues, roofs and just any other type of maintenance issue. When it comes to condos, you really just have those four walls that you have to worry about. So your maintenance costs are very, very low. Uh, Talking about amenities, if you find a building that already has great amenities, it's all about finding the property that is going to cost you the least amount, because what we were talking about before, every single unit in that complex is going to have access to those amenities. So it levels the playing field. Price points for condos, they are a lot lower than purchasing a single family home. And it allows you, especially if you're a brand new investor, it allows you to get into this market earlier, build up some knowledge and some expertise, and then continue to grow your portfolio. And then from a lifestyle standpoint, condos are great because they're more in an urban area versus single family homes, which are in a suburban area where you need to constantly drive. So again, using my market, Miami, Fort Lauderdale, you're in areas where you can pretty much walk to grocery stores, sporting events. You just have everything within a 20-minute walk. And it's just a better location for lifestyle. Doing a case study. This is actually one that we just found today. So this is super exciting. So this is a condo, one bedroom, one bath. The seller's currently asking for 349,000, which is a great price. The projected revenue based on comps, not only in the area, but also at the same exact complex. We're seeing these condos rent for $56,000 a year in revenue. That does include the cleaning fees, just so you know. So you're looking at about 4,600 a month in revenue. The HOA on this property is 556 a month, which is on the lower end. The taxes are only 441 a month, and the insurance is a little bit over 300 a month. Putting 20% down, which in any market, that's what I recommend in order to get the highest cash flow that you could possibly get. You're looking at putting about $70,000 down, and then with about 3% in closing costs, that's going to add a total acquisition cost of about $80,000. This property cash flows about $4,500 a year, or 550 a month, and your cash on cash return is 6%. So when it comes to short-term rentals, I know everybody wants to get a higher, cash on cash return. You're able to do that with single family properties, get between 10, 15, and even 20% return. And obviously you have a lot more stuff to do, whether it's renovating the property, it's adding amenities in the backyard. There's like sweat equity that goes into it. If you're looking for something that is more of a lifestyle asset, low maintenance, and cover your costs and get to visit the property a couple times a year, a condo might be an amazing option for you, because not only is it going to pay for itself, but you're going to get a little bit of money in terms of cash flow. And then that doesn't even account for appreciation, the principal payoff, which your guests will pay, and then also the tax benefits that everybody knows about. So when it comes to condos, who are they specifically for? I just mentioned it a little bit. It's a lifestyle asset. If you want to come and you want to visit the property a couple of times a year, you don't want to worry about headaches as far as maintenance goes, and put any like sweat equity into it, then this is an incredible option for you. First-time investors, if you're just getting in, this is a lower price point than other asset classes out there. And you're able to, again, get experience, learn the game, and then continue to increase your portfolio. The next is somebody with a limited budget. Look, spending $1 million to $2 million on a property, it's not always something that's accessible for the everyday investor, especially when you're first getting started. So getting into a property that costs you only, 350, 400, 450, or even 500, it allows you to again get in the game, learn from experience, and then continue to build your portfolio. So Savvy, this is our entire team across the United States. So we are in, I would say, almost every market at this point. So what's really cool about working with us is every single agent is an active investor. So you know as an investor that you're working with somebody that's going to be able to help you underwrite the deals, make sure it's a good fit for what you are looking for, because every investor has a different criteria that they're looking for, and it's important that you're working with somebody that's actively doing it as well. And that is it, short and sweet. So hopefully you guys learned, what some of the risks are in investing in condos and how you can mitigate those risks and still earn a return. We'll open it up to questions for now. No questions? Everybody wants to buy a condo today? First question, do you see condos doing better this year or larger homes? We are definitely seeing better discounts on condos this year, just because, well, especially in my area, there's a lot of special assessments that are going around due to what happened locally here in 2021. A lot of these HOAs are now tightening up on reserves. Special assessments are happening right now, and we are definitely seeing bigger discounts on condos. So if you're looking to get into a condo, you want to be patient and you want to make sure that you're able to get the deal that you want. Next question, creative ideas to stand out if you own a condo. So again, you're very limited to what you can do. However, like our best clients, they're just doing something that's so simple, such as putting up very cool, unique wallpapers in each room. You don't even need to do all four of the like the bedroom. You could do just one of those walls, take really high quality pictures, and those are the condos that do stand out, and they do get a little bit higher revenue than some of the other condos. So I would say just by doing that, you could probably earn an extra $4,000 to $5,000 a year, and it might cost you $800 to do a couple walls. Other questions? Awesome. All right, everybody. Well, thank you so much for joining. If you have any questions for me specifically, again, my name is Andrew Lasky. My phone number is 518-502-8402. And you can also email me at Andrew at savvy.realty. Thank you so much for coming out.